Hello, traders and investors, and welcome back to Explain the Charts. It's September 19th, 2025, and today we have some truly explosive news and chart action to unpack for the S&P 500 ETF, SPY, as it surges to unprecedented all-time highs. The market is buzzing, driven by a confluence of significant economic policy changes and groundbreaking corporate developments. Let's start by looking at the broader news that's painting this bullish picture. Just this week, the Federal Reserve delivered a pivotal quarter-point interest rate cut on Wednesday, September 17th, and crucially, they signaled two more reductions are likely before the end of 2025. This rate cut relief was explicitly framed as a risk management move to cushion a softening labor market, according to Fed Chair Jerome Powell, who candidly admitted there's no risk-free path ahead. Historically, Fed rate cuts near market highs have often foreshadowed further gains, fueling investor optimism. Beyond the Fed, a major corporate catalyst came from tech giant Nvidia, announcing a monumental $5 billion investment in struggling chipmaker Intel. This move, giving Nvidia a 4% stake and involving co-development of chips, sent Intel shares soaring by 23 to 30% and was quickly hailed as a game-changer for Intel's AI positioning. The ripple effect was felt across the tech sector and the broader market. Even the cryptocurrency market, with Bitcoin surging past $117,000 and Ether above $4,600, got a boost from the Fed's cuts and streamlined SEC approvals for crypto ETFs, further indicating a broad risk-on sentiment. However, it's not all sunshine and rainbows. There are underlying currents of concern. Reports noted the S&P 500 and Nasdaq did briefly slip after the rate cuts, with this retreat linked to a weakening labor market, where job seekers feel awful. Despite retail sales beating expectations in August, projections for 2026 indicate stagnant pay raises and long-run inflation expectations are up, dampening the economic outlook. There's also lingering investor nervousness about a potential sell-the-news reaction to the Fed's decision and a possible rotation from high-flying tech to value stocks. Now, let's turn our attention to the charts and see how these narratives are reflected in SPY's price action. We'll begin with the daily chart, giving us a comprehensive view of the longer-term trends leading up to today's record highs. Looking at the SPY daily chart, the overarching trend from May 2024 through to September 2025 is unequivocally bullish. We've seen SPY climb steadily from around the 517 level to now trading above 660, establishing a clear pattern of higher highs and higher lows. A critical period was in early April 2025, when SPY experienced a significant reversal, dropping sharply from highs around 564 down to a low near 493. This intense sell-off saw volumes spike dramatically, indicating strong institutional activity and a period of significant uncertainty. However, the subsequent bounce from the 493 level to close around 548 shows strong buying interest at lower price points, establishing this 490 to 500 zone as a crucial long-term support level. Following this reversal, SPY demonstrated remarkable resilience, recovering quickly and then consolidating before embarking on its current ascent. The move past previous resistance levels, particularly the pre-April high around 564 and the June peak near 615, has been decisive. Notice the sustained upward momentum from July onwards, with relatively healthy volume supporting the price increases, signifying conviction among buyers. For long-term investors, the break above 600 in late 2024 and early 2025, and now 650, confirms a robust bull market, albeit one with occasional sharp pullbacks, as seen in April. The current resistance is simply the new all-time high, but let's examine the more granular movements on the shorter timeframes to understand the immediate price action and potential trading opportunities. Switching to the 1-hour chart, let's zoom in on the price action from late August through early September 2025. After a solid run into late August, SPY entered a period of consolidation, generally trading within a range of approximately 635 to 645 during the first few days of September. We observe a notable dip on September 5th, where SPY dropped from around 651 to 644 within a single hour, accompanied by a significant increase in volume. This sharp hourly reversal could be interpreted as a sudden wave of profit-taking or an early, nervous reaction to some of the underlying economic concerns, such as the weakening labor market narratives. However, this dip was quickly bought up, illustrating resilient demand and suggesting that bulls remain firmly in control, viewing pullbacks as buying opportunities. The recovery from this hourly low was strong, pushing SPY back towards the 649 to 650 range by the end of the trading week on September 5th. This immediate rebound from selling pressure indicates robust short-term support around the 644 level, which could serve as a psychological floor in the near future. The subsequent few days, visible in this time frame up to September 9th, show SPY maintaining these higher levels, largely consolidating between 647 and 650. This tight consolidation after a volatile move often precedes another significant directional breakout, reflecting a battle between buyers and sellers absorbing recent news. Now, let's narrow our focus even further to the 15-minute chart, specifically highlighting the crucial period around the Federal Reserve's rate cut announcement on Wednesday, September 17, 2025. Leading into the Fed's decision, SPY showed some minor jitters, hovering around the 659 to 661 level, as traders anticipated the outcome. Around 1756 Universal Time Coordinated on September 17th, we can see an initial spike to 661.72 followed by a sharp reversal, with SPY dropping significantly from 661.72 down to 654.3 by 1841 Universal Time Coordinated. This dramatic fall of over 7 points in less than an hour, backed by high volume, perfectly illustrates the trader nervousness and the initial slip after rate cuts mentioned in the news summaries. This 654.3 price point acts as a critical short-term support level where buyers stepped in aggressively. The subsequent bullish engulfing candles on high volume demonstrate a powerful buy-the-dip mentality, quickly pushing the price back up towards the 659 to 660 range by the end of the day. This rapid V-shaped recovery signifies immense underlying strength and confidence in the market's ability to absorb negative news. On Thursday, September 18th, SPY continued its march upwards, breaking decisively past the prior day's high and eventually reaching new all-time highs above 664.90. The sustained buying pressure throughout the day, with closes at 664.94 in the late morning and fluctuating around 663.41 by the close of the 15-minute data at 23:56 Universal Time Coordinated, solidifies the record-breaking performance. The market clearly embraced the Fed's accommodative stance and the positive corporate news, like the Nvidia Intel deal, as catalysts for further growth. The 660 level, which was a psychological barrier and resistance point, has now been comfortably breached, establishing it as new short-term support. So, what does this all mean for SPY in the short and long term? In the short term, the immediate reaction to the Fed cut and the Nvidia news has been overwhelmingly bullish. The rapid recovery from the September 17th dip indicates strong buying demand below current levels, suggesting a buy-the-dip strategy remains prevalent. We could see some consolidation around these new highs, perhaps a test of the 660 level as new support, but the momentum is clearly upward. However, the sell the news reaction on September 17th, even if temporary, reminds us of underlying fragility, especially given concerns about the labor market and inflation. For long-term investors, the consistent uptrend on the daily chart, coupled with an accommodative Fed and strong tech sector news, paints a very bullish picture. Major reversals like the one in April 2025 demonstrate that while corrections can be sharp, the market has a strong capacity to recover and set new highs. Key support levels to watch in the short term would be the 660 level, followed by the 654.3 low from September 17th. Below that, the 644 to 645 area, which served as support in early September, is important. On the upside, as we are in uncharted territory, psychological levels like 665 and then 670 will be targets, with no historical resistance points to guide us. For traders, looking for confirmation of support at 660 on a pullback or a strong breakout above 665 would be key entry signals. Always manage your risk with stop losses, as rapid moves, both up and down, are characteristic of this market. Recapping our analysis, SPY is currently at record highs, fueled by the Federal Reserve's interest rate cuts and positive corporate news like Nvidia's Intel investment. The primary bullish prediction is a continuation of this upward trend, likely pushing towards the psychological 665 and even 670 levels in the short to medium term. The likelihood of this is high, perhaps 70 to 75%, reinforced by persistent Fed dovishness and continued strength in the tech sector, which is currently making up a significant portion of the S&P 500. Conditions that would reinforce this bullishness include further positive economic data, especially if labor market concerns ease, and more strong corporate earnings reports. However, an alternative, more bearish scenario, potentially a short-term pullback or consolidation, would see SPY retesting the 660 level as new support, or even dipping back to 654.3. The likelihood of a minor pullback is moderate, around 25 to 30%, especially if sell the news sentiment gains traction or if the weakening labor market becomes a more pressing concern. A deeper correction, back to the 644 to 645 area, or even the 490 to 500 long-term support, is less likely in the immediate future, but could materialize if inflation surges unexpectedly or if geopolitical tensions escalate significantly. Key things to look for in the coming days and weeks include the Fed's updated dot plot for future rate cut signals, upcoming jobless claims data, and any further news regarding U.S.-China trade relations or tech sector investments. Watch for volume confirmation on any significant price moves. High volume on breakouts or breakdowns adds credibility to the move. Always remember to adapt your strategy to new information and maintain a disciplined approach. Thank you for tuning into Explain the Charts. Be sure to like, subscribe, and hit the notification bell for more in-depth market analysis.